The future of fixed protocol messaging. Will it adapt or be replaced? Every trader, broker, and IT professional knows that the fixed protocol has been the backbone of electronic trading for decades. But as markets evolve, with AI-driven strategies, blockchain-based assets, and real-time analytics, the question arises, is FIX still enough? Or will new technologies push it aside? Today, we'll explore the future of fixed protocol messaging, its challenges, innovations, and competitors, so you can stay ahead in the rapidly changing world of financial technology. Let's start with a quick recap. The FIX protocol was born in the early 1990s to streamline equity order routing between buy-side and sell-side firms. Over the years, it expanded to cover FX, derivatives, fixed income, and more. Today, it's the universal standard for trading communication, used by thousands of institutions globally. But while FIX has dominated for decades, the financial landscape has shifted. Traders now operate in ultra-low latency environments where every microsecond matters. Firms are pushing massive amounts of data through their systems. Traditional FIX, which relies on a human-readable tag value format, wasn't designed for this scale or speed. At the same time, new demands are emerging: real-time data processing, integration with machine learning, and even blockchain-based settlement models. FIX needs to evolve or risk becoming a bottleneck. Enter FIX Accelerate. This initiative introduces simple binary encoding, SBE, a compact binary format designed for high-performance trading environments. By moving away from verbose tag value messages, SBE dramatically reduces message size and passing time. For example, a traditional FIX execution report might take hundreds of bytes. In SBE, that same message could shrink to a fraction of the size, improving throughput while slashing latency. This is especially critical for high-frequency trading firms where shaving off microseconds can mean millions in P&L. Exchanges also benefit, handling larger message volumes without choking their infrastructure. And on the buy side, asset managers gain access to faster, cleaner data that feeds directly into risk systems and algo engines. In short, FIX Accelerate isn't a reinvention of FIX, but an upgrade, keeping the same familiar standard while optimizing it for the realities of modern markets. Of course, FIX isn't the only player anymore. Alternative messaging technologies are rising. Apache Kafka powers real-time data streaming pipelines, great for analytics and monitoring. gRPC, with its binary encoding and HTTP2 transport, is gaining traction for microservices and low-latency APIs. And some firms build native APIs directly into trading platforms for speed and customization. Each of these has strengths. Kafka excels at scale, gRPC at efficiency, native APIs at performance. But they also have weaknesses: limited standardization, higher integration costs, and lack of global adoption compared to FIX. In practice, some firms use these alternatives in specific workflows, like market surveillance or internal trade capture, while keeping FIX for core trading connectivity. Looking forward, how does FIX adapt to a future shaped by decentralization and artificial intelligence? One promising area is integration with distributed ledger technology, DLT. Imagine trades being settled atomically on blockchain-based networks, while FIX provides the familiar messaging layer to bridge traditional brokers with decentralized venues. On the AI side, FIX feeds are already being used as structured datasets for training algorithmic models. Execution reports, order book updates, and post-trade messages provide rich, labeled data that's ideal for machine learning. In the future, FIX could become the standardized input pipeline for AI-driven trading systems. And in the broader context of Web3, FIX has the potential to act as a bridge, connecting legacy financial infrastructure with new tokenized asset markets. So where does this leave us? Despite its limitations, FIX isn't going away anytime soon. Instead, it's likely to coexist with specialized protocols: Kafka for analytics, gRPC for services, blockchain for settlement. The future will depend on interoperability and standardization. The firms that succeed will be those who master not just one protocol, but an ecosystem, choosing the right tool for the right job, while maintaining FIX as the backbone. So here's the call to action. If you're in IT or trading technology, stay curious. Experiment with Accelerate, understand Kafka and gRPC, and think about how FIX could evolve in your own workflows. Because the question isn't whether FIX will survive, it's how you'll adapt it to shape the future of financial messaging. If you found this useful, hit that like button, subscribe to the channel, and drop a comment. Do you think FIX will stay dominant, or will new protocols take over? I'd love to hear your thoughts. Until next time, this is FIX Protocol Guy, helping you navigate the technology behind the markets.